Hello, everyone, and welcome to the Buck Stops Here. I am Catherine Murray. Well, if you've been watching the markets, you've certainly seen some major volatility within the metals and mining sector, and I'm thrilled to have an expert in the area. John Meyer is joining us. He's a partner and mining analyst at SP Angel. John, great to have you with us and to be able to get your views. I want everybody to be aware that we are filming this on Monday, February the 2nd, and we had a major sell-off in silver in particular last week. I know it was a busy week for you. Describe what is going on and what you've been seeing.
Well, there's a lot going on, and there's a lot of topics to cover. But I, the, I think the key thing is there's been a lot of technical trading. People are referring to this Six Sigma trade, and how well, I guess they're really trying to account for the huge volatility we're seeing in prices, and you know, but there are so many underlying factors that help gold and silver build up to very, very high levels. And then, of course, it reached the top. It's like a roller coaster. It got to the top, and there was only really one way, and it went down. And yes, we are now bouncing around, and everybody's saying, "Well, where's this going to stop?" It's kind of hard to know, but there is support. We're definitely seeing support at this level. Is there going to be another leg down? Hard to say, quite possibly, but we're seeing support.
So let's go through some of the factors, the underlying factors. And, stepping back, I think people got so excited and, in 2025 and really felt like they were missing out on these massive moves higher in gold, up 60% or so, and some of these other areas, like a silver, up over 100%, because there's this whole move into really wanting to own real assets, concerned about monetary policy from governments around the world. Maybe we should step back and kind of look at it from that perspective. Is that still the base case and a good thesis to invest upon?
I think there is still a good thesis for investment, notwithstanding the volatility we're seeing at the moment. So, everybody's got to be careful. What's really blown up this market right now is margin calls. We've heard that before, that's for sure. And it was COMEX that raised margin calls last week. But we've also seen the SHFE, the Shanghai Futures Market, putting in a number of, raising their margins as well through January. COMEX doesn't really like to do it, and suddenly, wham, they raise margins. And I think that caused the top. Maybe not such a bad thing because there was a lot of ongoing ETF investment. If we get into the more fundamentals, there's the debasement trade. That links to de-dollarization. So where lots of countries and organizations around the world have said, well, we don't really want to hold dollars or US treasuries anymore. We can see the direction of travel is still down, or at least they were seeing that till the new guy got in at the Fed, Kevin Warsh,
Right.
I think his name is.
Or
So actually putting in a steady pair of hands that has settled the market, and I think that actually helped the market to stabilize today. But what it said was, well, the Fed is more likely to be cautious and be careful and maybe not cut rates as aggressively as was predicted. So the US dollar rallied. We saw the index rally quite a lot. And then we saw the knock-on effect for everything else. And gold and silver are probably the most levered things to that.
Hmm. So it caught, I guess, the metals and mining sector by surprise to have Warsh nominated, giving rise to the US dollar, strength to that US dollar. And then a counter, of course, is that commodities pull back. But talk to us a little bit more because that's a dramatic drop to see silver down 30%, I would think. So talk to us what's going on in China in terms of some of the traders or trading that's getting out there now.
Well, we've seen a lot of Chinese investors coming in on. I mean, what's happened is it's become so much easier for investors to buy into gold and silver via ETFs, and then you've also seen certain groups moving crypto or trading crypto into gold and silver. I'd see that as perhaps a more secure type of investment, especially with some of these wallets becoming vulnerable to quantum. I don't. Hacking is probably not the right word, but they're becoming vulnerable to quantum computing power perhaps in future years. So again, there's been this move out of crypto, out of the US dollar, and probably out of a few other things